Right, so we've got all the information we need now about Rishi Sunak's budget for 2021. He has stood up in Parliament, announced loads of measures, plus loads of extra documents were released online. I've gone through all of that to give you the details of the things that you need to know about, the measures that are going to affect you, things like how much tax you pay, access to 5% mortgages, and just how much money you'll be able to spend with a contactless card. All of this and more in this video. I'm Andy Webb. Thank you so much for watching. If you do like what you hear here, don't forget to hit that subscribe button and that little notification bell so you get access to every single video I do. You'll be told when they are released. So let's get into it. Let's get into the meat of the announcement. The big one, the thing that most people kind of were paying attention to and had been trailed in advance, was about the support for jobs. This is meant to be a budget for jobs on a whole. So that's kind of where the big things were coming from. We know that Furlough, the coronavirus job support scheme, has been extended until September. Now, I've done another video on this. You can watch it up here, so I won't go into detail now. But that basically means it's going to carry on now for September. Few sort of caveats, but watch that video for more. Also announced, and I covered this bit in that video as well, was around the self-employment income support scheme. So for self-employed people, the equivalent sort of grants that you could get, how that had been expanded. So people who weren't eligible before may well be eligible now because of moving through to the new tax year, the 2019-2020 tax year, if you filled in a self-assessment form for that. That we already knew. That one is going to be available in April for grants up to $7.5 grand. The details in the budget announcement, though, came for what happens after that. There will be a 5th round of the SEISS grants. This will come around about July time, and this will be the last one, okay? There won't be any more. I say, that's what we always say, it's the last one, yeah? That's fingers crossed it's the last one. Hopefully we don't have to go back to any more of these schemes. But this will be the last one. And where this one would differ to the previous self-employment income support scheme grants is that this would also kind of be tapered down depending on how much your profits have been affected by COVID. So if it is 30% or more downturn in what you would normally have in your profits, you will still get the full 80% of your turnover up to a cap of $7.5 grand. If, however, it's less than 30% that you have suffered as a result on the period that it will be measured against, I don't know exactly where that will be. I guess we'll get more details on that soon. Then that will be reduced to 30% of the profits, and that is capped at £2,850. So it could be that if you are eligible for the 4th and the 5th round of SEISS, that in the 5th round in the summer, around July time, you will get less money. But that's the main thing there around jobs. Nothing else for any of the other excluded UK people. Okay, if 600,000 of those are included within the expanded SEISS, that's great, but it still leaves around 2.4 million limited directors, freelancers, people on fixed-term PAYE contracts who weren't eligible before. They still don't have anything, and it probably means they won't get anything at all. But I think, I mean, the pessimist in me, kind of the cynic in me, kind of thought that that was likely to be the case anyway. We've got some news on benefits as well. And one of the really big things that's made a big difference to lots of people was a £20 uplift on universal credit. Huge numbers of people claiming UC who weren't claiming it before. And, you know, really coming from potentially incomes where that drop to what the normal UC is would make a massive, massive difference. I mean, that £20 doesn't sound like much, but it can be make a big difference to people. That was due to end on the 30th of March. That will now be extended and for another 6 months until the end of September. So that is good news. Sadly, that's it. It's not a permanent one. So universal credit will still be relatively low, but we've got that. They've also announced that for some people on eligible working tax credits who aren't on UC, they'll be able to get the same sum of money, the same amount of cash, but they'll get it as a £500 lump sum. That's just due to the way those benefits are administered and paid out and things. So they'll get it like that. I guess we'll get more information on that shortly. That's mainly it on jobs and benefits. There's also some funding for training and apprenticeships and stuff, but for most of us, that's the main thing. Then let's just move on to tax and savings. And I'll do savings first of all, because it's a very quick one. It's a short one. Again, this had been sort of trailed in advance. We knew it was possibly coming, is a green bond. This is something that NSNI, National Savings and Investments, will offer to us as punters, where we can put our money, put it into savings, and it will be used to support green initiatives. So if you're someone looking for somewhere, an ethical place to put your money that isn't going to be used by the big banks who are potentially using it to potentially fund fossil fuels or other sort of bad things that might go against your ethics, this is a really good thing. What we don't know is how much it will pay us, how much interest we'll get in return. That will be announced in the summer. Whether it'll be market leading or up there with the market leading ones, it's impossible to say. They may well be banking on the fact that some people will be thinking, right, I want my money to do good rather than I want my money to get the highest possible rate. But the money that goes into there, the money you save there, will be used to fund, say, all sorts of green initiatives. There is another green sort of bank, they call it. I'm not quite sure quite how it's going to work. But this is going to be based in Leeds, and it's going to be funding all sorts of private and public initiatives on kind of environmental initiatives. So that's some good news there if you're worried about, concerned about investment in environmental things. I guess we'll get more information on that one shortly, but for most of us as punters, it's not really going to impact us day to day. That's savings. Let's talk about tax. Now, for most of us, the good news is there aren't any tax increases as normal punters. We aren't going to be sort of see our rates increase. But that's not really technically true because there are some freezes, quite a few freezes. The main one is around income tax. So the allowances for this normally go up on April the 6th, the start of the financial year every year. And that was due to happen just in, 6 weeks' time, 5 weeks' time, whatever it might be. 4 weeks probably. Blimey, I lose track of time. It's this year. You know what it's like. So in a month's time, they're due to go up by inflation, which meant roughly the personal tax allowance. This is the amount of money you can earn in a year before you pay any tax. We all get this unless we're really high earners. That due to increase from £12,500 to £12,570. That's going to go ahead. So that increase will happen. The next threshold, so basically for the next chunk of cash where we pay 20% tax on the income in that level, that was due to also increase by another £200 on top of that personal allowance, in total 270. So at the moment it's 50 grand. It will move to £50,270. Then above that, you pay 40% up to much sort of higher levels of income, 150k really. That's when you start paying additional rate of 45%. So those two increases on the threshold between your personal tax allowance and paying 20% will increase, and also the difference between the 20% and the 40% brackets, that will also increase. Okay, so that's going ahead as planned. But then that will be it for 5 years. It will freeze at these levels until 2026. So you might think, well, okay, what does that mean? It just means I'm not going to pay any more tax. I'll pay the same tax I am. And that's how it was presented in Parliament. But what it actually means is if you get a price increase, a price rise, so to speak, your wages go up. That could be because just generally on inflation, and this doesn't always happen, depends on your employer, but often every year they will try and increase your wages by inflation. If it goes up, you will get closer and closer and closer to that next tax bracket. Now, if you already earn under the personal savings allowance, it could mean that within a year, 2 years, 3 years, 4 years, whatever it might be, that you are pushed above that and you start paying tax on the money above that threshold. Remember, you still get that personal tax allowance you pay nothing on. It's only between those thresholds where you pay that tax. So you move into that and you'll start paying some tax. It could be that you move suddenly from the 20% bracket into the 40% bracket, again, only on the earnings above that level. But you will, as you get these pay increases, you will find that you are actually paying more tax. So it's not a tax increase, it's more a stealth tax increase, stealth tax grab, so to speak. So that's what's going to be happening, and that's say it's going to be frozen for the next 5 years. Obviously, they can make these changes over the years if things get better or worse, but that's where we are on that. There's also going to be some tax thresholds which are frozen as well. They're going to stay as they are right now until 2026. That's inheritance tax, capital gains tax, and the pensions lifetime allowance. Now, these are probably most likely to affect people who are quite high earners, but basically what it means is that they'll be able to, again, as we see increases every year with inflation, those kind of things won't be reflected in our allowances, so you will pay more tax on what you have or able to put less away in terms of the pensions lifetime allowance. So that's what's going to happen. So they will be generating, and they're doing this to generate money. We know we need to generate income. They need to pay for the things, measures, the furlough and all the bits and pieces, right? But this is one of the ways they're doing it. They're just presenting it as no tax increases because in the Conservative manifesto in the election, they said there wouldn't be any, right? Any cuts, so to speak. So that's what's happening there. Now, the other big tax increase, right, which is going to affect not necessarily you normally as a punter, but it will affect people who are paying corporation tax. So this is all businesses which are limited companies. And these are often, particularly the smaller ones, these are the people who have been quite massively impacted over the last year. If the smaller companies who are directors not being able to take advantage of any of the support schemes. And there was a lot of worry. It was trailed that corporation tax would increase, either straight away or maybe tiered over years during this parliament. And that is what's happening, but they've kind of done it, I think, quite cleverly. I mean, we'll see as we get more detail exactly how this happens. That it does mean that some of the smaller companies actually won't see the increase. So let me explain what's happening. At the moment, corporation tax is 19% of your profits. So the company will pay that 19%. And that is going to stay like that for this year and next year and the year after. Is that right? This year and next year? Yes, but the year after that, so 2023, so in 2 years' time, corporation tax will jump up to 25%. That's a 6% increase, which is massive, right? And it's going to generate a lot of money, a lot of income for the Treasury and for the government. However, and this is the clever bit, they are going to tier this increase. So if your profits are under £50,000 for the year, you stay at 19%. And actually, they say a lot of the businesses are going to be there. So again, when we talk about the small businesses that have really struggled over the last 12 months, they're concerned that they're being hit. One hand, no support. On the other hand, extra taxes. It didn't seem fair. Well, this would hopefully mitigate that a little bit. They still didn't get the support, but at least they're not going to have to pay extra for the support they didn't get. It will then go in tiers up, and they haven't shared exactly what these tiers are, but the top 10% of businesses, so basically if their profits above £250,000 a year, they are the ones who are going to be paying that full 25%. So that will generate obviously a huge amount of money there. I mean, personally, from a personal point of view, I imagine this isn't really going to hit some of those big digital businesses like Amazon, like Facebook, like Google, who it could be argued don't pay their fair share of tax because they have all these systems to legally avoid it, if not fairly and ethically avoid it. Well, they're still going to avoid that. And much sort of talked about digital sales tax or some sort of windfall tax on these businesses hasn't come along. And we kind of thought that wouldn't happen anyway because they might delay that announcement. There is a tax day later in March with some further announcements, or it might just be the autumn statement, which is the other kind of big moment in the year when the government, when the Chancellor stands up and gives some sort of economic policies. It might be delayed till then. We've just been a weird 12 months where it seems to be that the Chancellor was announcing these measures every couple of months. But normally there's just twice a year, the budget in the spring and the autumn statement. So it might be we find out about that later on. So that is what's happening in terms of corporation tax. So it's not the bad news that many small businesses feared, but it is going to be quite a big jump up for other businesses. And we will get more detail on that, I'm sure, in coming months. Finally, on tax, the last thing to talk about. This happens all the time. It seems to be a general thing. They say they're going to increase the duty on alcohol and petrol, and then it comes to the budget and they don't actually do it. They say we're going to freeze it for another year, and that's what's happened. So booze, the duty won't go up, which I think is absolutely fair this year. You think about the pubs really struggling. If they suddenly had to sort of be charging more for the booze they were serving, that wouldn't be the best thing. So that's been frozen for a year, and petrol has also been frozen for a year. Seems to go against a lot of the kind of green measures and the sort of targets that are set to kind of help us reduce our carbon emissions and so on. But while there is a kind of, the argument was made that while there is a lot of sort of uncertainty around public transport and people not sure about getting trains and buses and other things, that would be unfair to sort of add an extra expense in terms of petrol. We'll see what happens if things go back to normal next year. And hopefully that will be one of those things that does get looked at and does increase. I think it's a fair thing if you are worried about environmental measures on one hand, and then you sort of ignore it on the other hand by not reflecting inflation costs increases in petrol. There are some duty increases that are going to go ahead with inflation, such as air passenger duty. So when you do start flying again, those prices will, those taxes will be a little bit more. Vehicle excise duty and some stuff around company vehicle benefits again, they would all increase in line with inflation. Now, a couple of big ones here around housing and home buying. So we knew that the stamp duty holiday, there was a lot of people saying, look, this is going to end on a cliff edge, 31st of March or 30th of March, sorry. It's going to end and it's going to cause all sorts of problems. So what they've done, they have extended it for 6 months. This is in England and Northern Ireland only, okay? Because Wales and Scotland have their own schemes and their own kind of stamp duty holiday kind of thing. They call it even different names, different levels. So they haven't announced that yet. So check out what they're doing if that is you, if you're living or thinking of buying in any of those nations. But in England and Northern Ireland, the £500,000 stamp duty exemption will stay until the end of June. But it won't just stop straight away then. It then kind of tapers off. So for, let me think, is it another 3 months? I've got it here. So I've got my article here from the blog. I will link to that as well. So if you want to check over these again, read stuff again, I've gone through everything over there on the blog. So from July until the end of September, that nil rate band will drop to £250,000. So you won't pay any stamp duty as long as it's your only property on that first 250k. And then from the 1st of October, it goes back to what we had before the pandemic and before the stamp duty holiday was introduced, which was the first £125,000. Now, if you're a first-time buyer, it will remain at the £300,000 rate with both of those cut downs. But obviously, you've got a few more months, 3 more months now, potentially, if you were to move for the first time, buy your first house for the first time, and you would get the full £500 exemption on stamp duty, which if you're living in places like London and the South East could actually make a lot of the difference because how property prices are much more expensive. Elsewhere around the UK, that £300,000 is probably more than enough the first time. Now, there's also another scheme that's been announced, which is again to help people move house, hopefully to help them get a mortgage if they've got a very low deposit or not much equity in their property, because it's not just for first-time buyers, it is for anyone moving. And that's if the property is valued at under £600,000, they will be able to get a 95% mortgage. Now, these have disappeared over the last year in particular because they're often the riskier ones. So the lenders haven't wanted to give them during the pandemic. In fact, a lot of the 90% mortgages disappeared as well. What this 95% means is you have 5% deposit or 5% equity, and then the lender will give you 95% of the money to buy that house. Well, what's going to happen is the government are going to guarantee against a large proportion of that mortgage to encourage lenders to offer more of these. And some of the big banks are going to start this in April. Others will follow on. I'm sure we'll see more of these as the year goes on. But the idea is to try and help people who have been haven't been able to save up enough to get that 10% or whatever it is for a deposit to actually finally get on the housing ladder. It doesn't have to be a new build. Again, it doesn't have to be your first property, first time buyer. It can open to lots of people. Obviously, if house prices, we've seen them jump up massively because of the stamp duty holiday already over the last 6 months or so. If that extension keeps prices going up and increasing them, or this brings up prices again, it doesn't necessarily mean it's going to make it that easy for you, because your deposit, even to get 5%, is going to need to be larger and larger. And also, last time something like this was happened, you don't always get the best interest rates. If you can get 10% mortgage, if you can save for that, if you can wait and get 10%, you'll get better deals. Even better if you can get 15% deposit, 20% deposit, all the way up to a 40% deposit, which is a 60% mortgage, you'll get the best deals. But anyway, that's what's happening in home buying. Let's move on to retail now. Again, what a lot of us are kind of looking forward to is all these different out of lockdown deadlines is April the 12th, when hopefully non-essential shops will open. For me, it's try and get these this haircut, my hair, a bit of a chop on here. That's what I'm most looking forward to. But it will be nice to have other shops available for us to go into, other businesses, retail businesses, and great for them as well. So a few things are happening there. One of them is around contactless. Now, it was only 1st of April last year that contactless jumped up from £30 to £45 for the amount you could spend on your debit cards or your credit cards without putting in your PIN. That is now going to jump up a huge amount to a massive £100. That is a big jump. And some people are sort of scared that might be quite an incentive to thieves, which is possibly true. But the actual fraud on contactless payments is very low as a proportion. It's about 2% of all transactions, not that many. So I wouldn't worry too much about it. And there are other things that you can do to help mitigate against this. And I'll probably do a whole other video about contactless and protecting yourself and making sure that your money is safe. But that is going to happen probably almost straight away, although it is up to the individual retailers to change their system. So it might be a bit of time before you actually can do that. But a great way for you to, convenience, at least when you're out spending money over 45 quid. Doesn't matter, as long as it's under 100 quid, you can tap and go. What else have we got in terms of retail? So the VAT cut. Now, this is something that was announced last year. It's been running for a while now. This is for leisure and hospitality businesses. So essentially, rather than adding 20% tax, VAT, value added tax to the things they are selling, that rate was dropped to 5%. Now, sometimes the businesses passed that on to us. So we got cheaper prices. Sometimes they kept their prices as they were, but it just meant that they could sort of keep a little bit more to make up for the losses they were making elsewhere. That was due to end. That has now been extended. That 5% rate will remain until the end of September 2021. And then it won't suddenly jump back up to 20%, the VAT we pay on everything else, or pretty much everything else. It will go up to 12.5% for the next 6 months. So we're looking at April next year, so a year's time before it goes up to 20%. The idea here, hopefully, being that will encourage more of us to get out. They can offer us lower prices in the restaurant shops, whatever it might be. Again, this is Hospitality and tourism, though, okay, these are the ones that are affected by that. Everyone else, it remains at 20%. And in fact, there hasn't been any kind of extra things like eat out to help out. That's not come back, or any equivalent schemes people were talking about. Would there be a voucher to get us out into the high street? Would there be something to maybe get us into gyms or to whatever it might be, to try and encourage us back out there to spend with those people who really, really have struggled over the last year because they've hardly been open, if at all? None of that, okay? So really all we're getting is that VAT cut, and that may or may not be passed on to us. In terms of if you are someone running one of these businesses, a retail business, then you are able to access a grant. Again, I won't go into a huge amount of detail on this here. If you are a non-essential retailer opening mid-April, April the 12th, then you can probably claim a restart grant of up to £6,000. And I think that's per site, right? So if you've got multiple locations, you might be able to get £6,000 per one. And the idea of this is to kind of get you back up to speed so you can open up again and get people through your doors. If you're in one of those leisure and hospitality businesses, which will be delayed opening, they won't be open just yet, pubs, hotels, restaurants, gyms, cinemas, then the grants will be up to £18,000. And again, I do assume that is per site as well. More money because they're going to be closed for longer and have been closed for longer. That is for England, I should say, but there will be funds set aside for the other nations, so Scotland, Wales, Northern Ireland, because they fund these businesses themselves. So they'll have money to do something similar. It's up to them exactly how they distribute that and what levels they give to those businesses. So that's the bulk of it, really. They're the most things that are going to affect us as punters, as normal people. There are other sort of money going out there for sports and the arts and culture. So hopefully try and keep those businesses like museums and cinemas or gig venues or nightclubs, maybe some money to help them sort of keep going until they can reopen. Because a lot of these people, they're on the brink now. They really are. There's also, this is bizarrely, some money going towards a bid for a 2030 UK and Republic of Ireland joint World Cup bid. So you never know. Maybe in 9 years' time, if successful, and we'll be able to have that big sporting event here. A few other bits and pieces I won't go into a massive amount of detail on. If you do want to read more about everything I've spoken about right now, then do check out the article on the blog. It will be linked to below. And I'll be going into more detail on all of this, getting the full analysis in my Cash Chats podcast this Friday. I'm going to be joined by Claire Barrett, the Financial Times' consumer editor, and we're going to talk through these and really get into detail about exactly what they mean. And I wouldn't be surprised that over the next sort of day or two, more details appear about some of these things so we can kind of really understand what it will mean for you and for me over the next sort of few months and so. Now, if you found this useful, please do hit that like button. It would mean the world to me if you do that, just so I know that this has provided you some extra information, extra knowledge, so you understand your money a little bit better. And if you don't want to miss out on any of the other videos I do, don't forget to hit that subscribe button and the little notification bell that pops up right next to it. My name's Andy Webb. Thank you so much for watching. Until next time, cheers. And here are a couple more videos you might find interesting.